Hello and welcome to Dividend Hub and our last portfolio update for 2022. It's a little bit late as usual. We're already in January of 2023, but that's fine. This is going to be a slightly longer episode. We're going to go over some of the goals that we set for the year 2022. Set some new goals for 2023 and go over some of the new buys that we've done in December. So let's jump right into that. First of all, the dividend income of the month is 99 cents from Realty Income, 40 cents from Aflac, $1.20 from T Rowe, $1.10 from Raytheon Technologies, $1.13 from Johnson & Johnson, 37 cents from Intel, 43 cents from Next Era Energy, 88 cents from Coca-Cola Company, $1.08 from Target. And that totals, that's $7.57 in total. Very happy with this end of the year dividend, honestly. So we bought a little bit more this month than we should. We went a little bit overboard here at the end. We'll go over that at the when we look at the contributions for the year. But the first stock we bought in December was Best Buy. There are a few things that are a bit wonky with this. It's a short, medium-term dividend grower, about 12 years going now. They have paid a dividend for the last 18 years. I do like the 10-year growth rate. It's 17.87%, which is really good. The payout ratio is about 48.75%. That said, the stock has seen a decline this year, about 19% or so. And I'm suspecting that there might be more. It's going to drop further. They have declining revenue. People are a little bit on the fence about the fourth quarter performance here, but we'll see. Added it for now. So I bought one share of Best Buy at $85.50, and it's since then dropped a little bit. The annual dividend is $3.52, which makes it a 4.24% dividend yield. Here we can see the dividend growth has been really good recently. The last increase was 25.71%, which is insanely good. Over 3 years, it's been 20.74%, 5 years, 20.95%, and 10 years, the 17.87% we talked about before. So this has a lot of potential to grow dividends over the coming 10 years, hopefully at a rate of 17.87% continuously, but I'm not sure about that, but we'll see. Next up is Bank OCK. They have a pretty good 10-year growth rate of their dividend as well, coming in at about 17.46%. They've been paying and growing their dividend for slightly longer, 24 years. So we're coming up on that 25 year in 2023. Their payout ratio is really low, just shy of 28%. They've also seen a decline this year, but they have. I feel like they've been hovering around some fairly decent value here, and I feel like they're active in some high growth markets, so there should be potential for future growth. We'll see. It's a bit more of a long-term stock than the other two that we're adding this month. Some things to dislike is probably will drop further, and the growth that it has seen is it's not amazing by any means, but it's been steadily growing, and it's probably gonna keep growing, although very slowly. Let's go into the next slide. So I bought one share at $45.86, and that has also seen a slight decline since then. It's now trading at $40.42. The annual dividend as of right now is $1.32, or 3.27% yield. So the dividend growth has slowed a bit, but the last year it's still grown at a rate of 7%, which I feel like is pretty decent still. The 3-year at 10.89% and the 5-year at 12.03% is good, and the 17.46 on 10 years is amazing. We'll see if they can keep that up. The last one we're adding this year is Merck & Company. I think it's called that, or MRK. They're a bit more of a short-term dividend grower. They've only been paying and growing their dividend for 12 years. Their payout ratio is still low. It's around 35% or 35.5%. But they have some really good long-term prospects. The pandemic for sure gave this stock a significant uplift, and it's kind of expensive right now. But I still feel like they have a strong growth potential. The growth rate over 10 years has been 5.6%, and that's probably the biggest thing to dislike about this stock. Outside of it has been in a huge upward trend for a while, and probably overvalued and expensive, but I think this is a good long-term position. So I bought this at $108.61, and right now it's trading at 114.84 cents. The annual dividend is $2.76, or a 2.4% dividend yield. And here we can see they've been increasing their dividend on the short term. So the last increase was 11.29%. 3 years has been 9.89%. 5 years, 8.92%, and 10 years, 5.6%. So hopefully there's some potential there to increase the growth, so the 10-year average growth goes up over time. That would be really nice. I've remade the dashboard again, basically because the allocation graphs in the bottom were starting to be completely unreadable because there was so much information in them. So I've changed this to a portfolio value over time tracker, and that's gonna be monthly value. So this is gonna be interesting to see, and it's gonna be updated every month. And the same dividends over time is also the monthly tracker. So they're gonna be, we're gonna see how they correlate over time. And then I also added estimated monthly dividends per month in the bottom right. So now we can easily see that our low months right now are about $7.39, and our high months are about $10.60, except January, because Pepsi is being weird and they have that delayed 1 month for some reason. And then the top one is still the dividends over the last 3 years. Anyway, So here we can also see that our yearly contribution in December has stopped at $2,482.50. And that's, I would say that's roughly $10 or $20 over what we should have contributed. So I'm a little bit on the upside here, but I would say we're still okay with that. At least I am okay with that. I feel like I'm within the $200 margin still, and obviously reinvesting the dividends that we get, so it's gonna increase over time anyway. So at the end of 2022, our lifetime dividends come in at $68.43. Our current portfolio yield on cost is 3.17%, so I think that's a really good spot to be in. And our average growth rate is between 12, or technically between 11.17% and 12.94%. But I mean, long term, it's 12.26%, which is really good. As of right now, the portfolio is up about 2.86%. And if you account for the dividends, we're talking about 5 or 4.96%. So that's really good. I remade the allocation thing into this. So here we can see that we are a little bit heavy in some areas, and that's going to be something that we correct over time. At least that's the intention. But right now we have some stocks that are around 7 or even 8%. And I've added a 4% target up there because when we get into the goals for 2023, we're going to talk about that, but we're going to be going into 2023 with 26 stocks, or in January, because I have one more buy that I want to do. It's going to be 26 stocks, and that's roughly 4% per stock if you have an even allocation. And I want to be roughly even. And then we can see that consumer staples and consumer discretionary is making up about 40% of the portfolio. We're going to see how that changes when the portfolio is more even between the holdings. I'm very interested to see that. This is the overview. Not much has changed here. We are above $100 finally. $103.35 annually with the portfolio. And our yield on cost is just slightly higher than the current dividend yield for the stocks that we have. That's cool. So let's talk about the goals we had for 2022. Portfolio contribution should be around $3,200 at the end of 2022. I would say that this goal is met. We did go a little bit over, and I think it's around contributions right now are about $74 or something over. But I think we're in the clear there. Reach an expected annual dividend of $100. We actually met this goal. I was bit I didn't know how big of a chance it was to meet this goal, but we made it. And we'll take a look at the 2023 goals in a bit. But we also wanted to increase the long-term growth of the dividend specifically to 15%. This is something we did not do. And in hindsight, I think this was a unreasonable goal, but it was an interesting experience anyway. We had a goal, we didn't make it. We did get kind of close. If we go back to this slide, we're at 12.26%, which is, I mean, it's less than 3% away. I'm happy with the growth that we have in the portfolio right now. So another thing that we tried to do was try to keep average portfolio yield around 3%, while increasing the long-term growth of the portfolio. So we definitely met the 3%. We're a little bit over. We're at 3.17% right now, so that feels really good. Further diversification by investing in more sectors. 9 out of 11 was the goal, and we have arrived at 10 out of 11. The only sector that we haven't covered is the materials sector, and I feel like there's... it's going to be one of the 2023 things to look for. Maybe adding another stock that's specifically materials oriented, so we get into that sector. But that has been a bit of a struggle there. Have at least 15 different stocks in the portfolio. I think we went a little bit overboard here. We're at 25 stocks now, and I've already decided what I'm buying in January. So we'll be at 26 by the first month of 2023. But we did meet the goal. Here we can see an overview of the contributions that we've done over this year. So the first year we contributed almost $800 to the portfolio. I did get a bonus back in December of 2021, so I decided to double that amount because, getting started is nice. And then for 2022, our total contribution is going to be $2,482.50. And again, I think the dividends we got is around $68. So it's about $14 difference. $14 that we've put in extra that shouldn't be there, in quotation marks. But this feels completely fine for me. Obviously not relevant, but the portfolio, or the portfolio contributions growth from 2021 to 2022 has been 213%. That's obviously not relevant. It's going to be interesting to see how this develops over time, because 2023 is going to be the first year where we have a full year behind us. So we'll see both the end of year value and the contributions that we put towards the portfolio in a much better light. And again, end of year value for this year was $3,263, and that has increased since 2021 by 302%. Again, not relevant. Let's move on. So the dividends. We only got 74 cents in dividends in 2021. So the 9,147.3% of an increase over last year is, again, not relevant, but these are the months that we have done so far, and it will be very interesting to see 2023. My estimate is that we are going to hit the same amount of dividends, or around 70, somewhere in probably June, July, or August. I think it's likely it's going to be July, but we'll see. And we did reach our first milestone, which was $100 annually. I decided to put up a bunch of these goals to see how long it's going to take. So for the first 10 ones, or the first 10 milestones, the distance is exactly the same. It's going to be $100 annually to be added in every single one of these milestones. So it took us 426 days to reach our first $100 annually. And the next $200, or the next $100, is going to take less time. I'm just not sure how much. I think it's unlikely we'll hit it in 2023 without, buying some high yield stuff just to hit that. But it's going to be interesting. It's going to be, for 100% sure, it's going to be less than 426 days. The only question is how much. It's going to be interesting over time to follow this up. So I decided for 2023 that the goals should be a little bit simpler. And that's also because I want to focus on very specific things for 2023. So the yearly contribution with dividends reinvested should be roughly $2,560 at the end of 2023. I want to reach an annual dividend of $200, but I think this is unlikely. We're probably going to get fairly close, but I think this is going to be unlikely. And the big focus of this year is going to be rebalancing the portfolio. I want to even out the holdings, and I want all of them to be roughly 3.5 to 4% of the portfolio. So stocks that drop are things that we'll automatically put in more money in, right? So we'll take a look at how we do those buys over time. But the goal is to be somewhere in that vicinity of 3.5 to 4% at the end of 2023. We'll see how that goes. Anyway, that's about it for me. It's been a really interesting year for me. I have learned so many things, and I'm gonna have a lot of fun with this in 2023 as well. Thank you for watching, and have a really nice evening.